Welcome back. Wow, what a past few months, what a past year for the US and the world economically. Lots been going on. If you're trading, this is good though, you have price movement. If you're holding, stick strong to your strategy, keep averaging in, have a goal, have an exit plan or an entry plan. And the big news of the day, is there a battle going on for crypto? Are the most massive financial players in the world making a move into cryptocurrency and helping it get adopted and helping it become the revolutionary financial system that it's meant to be? Is this, more importantly, foreshadowing the coming of an ETF and a spot ETF, quite possibly, for crypto? Are these agendas at play right now? Are we seeing it unfold right before our eyes? I saw a lot of connections, and I feel like I put something together that's at least somewhat interesting to look at. Before we get to that, please like, subscribe, and let's take a look at the charts. Bitcoin looking pretty interesting. So we're getting a lot of metrics for long signals here. We got a break to the upside on the 1 hour on Bitcoin. On the very short term end of this, we're forming a downward channel, which I see some bearish bullishness. We've been mostly weak on the RSI, and that's been giving us some really mixed signals as far as our indicators go. And you see here we have shorts calling for just below our live market price, which is at 19,070, calling for an entry on a short at 19,200 or 1987. Short term for Bitcoin though, it's been really strong to the upside. Had somewhat of a bounce back here on a very short time bottom here. You can see some clear trends on this resistance and support here. So looking forward to quite possibly furthering this readout on this breakout here for Bitcoin in the short term. Ethereum, we didn't really have much result as far as the merge news as it was expected. So again, short term getting long calls on our metrics for Ethereum. I think a lot of this has to do with the synchronicity. So a lot of volume being weighted on either one side, either selling off or buying. Overall for Ethereum, I think we can look forward to some more somewhat sideways action here now that we trended up for about the last 30 minutes or so, 45 minutes to an hour. And we're gonna likely trend around here, the low 13s to about high end would be 1350 in the next 2 hours or so. Solana had a really nice bounce back here from yesterday. Overall, close to $3 up. Still getting long calls here on our metrics, on the MACD, which has a pretty decent percentage of win. Our profitability though, eking out just above 50%. So we want to stay strong here. We're going to use our synchronicity volume to get a good read on the indicators, because I think you're going to want to understand where the behavior is going. With sentiment being strong right now as far as macro news having a heavy influence on the market, you're going to want to look at behavior a little more closely before you make your decisions here. And we're getting a strong readout on the breakout, getting along the super trend at $32, which is right around our live market price, but that's basically asking you to wait here to get lower before you long. And by that time, likely you've invalidated this breakout. So again, watch for behavior, see where the market is waiting on one side, if it's sell or if it's buy. Base your indicators off of that. On compound, we're getting a much stronger read on the upside, the breakout. See in our speed fan here, I built out a few days ago. We bounced off this cool off zone here, back in to a strong time frame, and you see the market is following lead here. Got a good breakout, profitability, just above 50%. So RSI made a nice return though. Just a couple of hours ago, you were seeing a really strong market-wide trend of weakening RSI here. So look at these big gaps, right? A lot of news, a lot of follow-up news too, aftershock from the FOMC, Powell's speech. And now he's talking about housing and things like that, and it doesn't sound great. But these are the opportunities, right? You wanna play the price moves. And sometimes you can almost expect a trend in reversal, or reversal in trend rather, on the price for at least immediate short term. Long term, we're not out of it, right? We're just entering into these hiked rates scenario and environment. We're gonna start to see possibly some effect on the unemployment and housing. Mortgage-backed securities have been getting dumped by the Fed, which have been affecting the bond markets. And that has a lot to do with what we're gonna talk about later with fixed income equities on the ETF side of the stock market. However, again, getting back to MATIC though, MATIC has been one of the few that have been really working off of this potential reversal on the weakening market-wide trend. And it's just riding along really strongly here to the upside, always following through with its breakout calls. Now we're getting longs on this call. Short term, definitely looking forward to 7-8. Really on the high end side, we could be looking at pushing 80 cents here. Although that would require some more synchronicity in the market. Market seems really susceptible to news lately. So we'll see if we can ride out this storm as far as macro goes. Injective, we talked about it just a few days ago for the first time. I really like this play as a hold too. Really interesting DeFi platform with synthetics involved. Recently listed on Coinbase exchange. A lot of interesting things going on behind the scenes with Coinbase. I think Injective could make a really nice move in the midterm. We'll see how it does in the long term. However, this is not much of a DeFi market right now, so you're gonna have to look to just a select few. We saw, oh, what a red candle there, nice dump. You're gonna really have to look for those select few that really make it. Otherwise, profitability looking pretty strong for the upside on Injective overall. On our short terms, we're getting a lot of long calls. 1 hour also weighing pretty heavy to the upside. Stochastic looking to try and peak up here above our price. So some pretty good strength here for MATIC and Injective. And this dollar bill DXY just continues to soar. It's constantly breaking out of its trend here, fulfilling this breakout probability. Very interesting move. See a nice, clean, readable support for the DXY overall. And if you look at DXY, tracking it back for a few months, just at least, we started out the year around $84. This time last year, the dollar was at $90. DXY was at $90. So we made a really hefty move to the upside here for the dollar DXY. And you got to think that when this market turns and heads back into assets, all of this liquidity is going to flow back into the asset market. And it's going to be really interesting to see how the world responds to crypto at that point. All right, let's get into the news. So we had a day added to the Bitcoin halving. So, I mean, pretty reflective though of the market. Some of the larger miners are facing some sell-offs in order to survive. All right, fear and greed on the CNN business for stocks reaching extreme fear. Clocked in on extreme fear on the stock market. For crypto, we've been in extreme fear, but we're getting more extreme at 20 now. So this is, I hate to say, but more or less, this is kind of good because we want more decisive moves right now. We want more decisive results in the market. We don't want a stranglehold. We don't want to be stalled out. Going sideways is rough for the market because that's what really kills interest. That's what really kills confidence. When you start to have price movement and things like that, yeah, people are affected, positively or negatively. But if you look at it ideally and positively overall, for the length of time, we know crypto is going to be here. We know it's revolutionary. We have major financial markets looking at it and institutions moving in. So we want some price movement. We want to gain confidence. If people need to get out, then they can get out. If people need to get in, then they can get in at a good price, and we can build from there. So fear This time last year, somewhat similar range. This time pre-halving 2018, right around the same range as we are now. So more or less on the behavior, still following the same cycle overall. As for price though, you might make some arguments mathematically, we're at a different area, and exponentially, yes, very much so. But behavior is still more or less looking the same overall. Okay, so FTX recently, backed by DCG, funded a decentralized database, which is a provider of infrastructure for building dApps, things like that, Web3, native development, called Quill. Very interesting. And this is extra interesting when it has to do with what I'm just about to talk about now. So at the top of the show, I asked, is there a major financial move into this market with institutional buyers? And we believe so, right? Because we've been seeing a lot of news with that. Just the other day, we saw Nasdaq move in, beginning to offer custodial services on its portfolio in cryptocurrencies to its clients. We saw BlackRock mentioned in this article, partner with Depository Trust Clearing Corp, do the same. We know BlackRock's been in crypto for quite some time now, heavily invested and continuing to expose its clients to cryptocurrency. Recently partnering with Coinbase and Kraken. Most notably, Brian Armstrong's Coinbase spearheading this partnership. Just yesterday, it was announced that INX platform is backed by the SEC. Gensler is associating himself with this platform and already offering registered security tokens in crypto on this trading exchange. So INX, publicly backed by the SEC and being spoken about by Galaxy Digital, a heavy investor in Bitcoin and Ethereum, just to name a couple of them, Solana as well, chiming in on this TradFi movement. So SEC isn't the only one. Actually, it's not the first either that had built a TradFi platform to trade towards the traditional market. While this platform is mostly public, there's a project called Project Ion, which is a private trading platform built by BlackRock. Who is BlackRock? BlackRock is the largest asset manager in the world, holding nearly $8.5 trillion in assets. They mostly focus on diverse assets, right? Look at that. 51% are firm managed equities, 29% fixed income, 8% multi-asset, 9% money markets, and 3% alternatives. All right. So what does that have to do with anything, right? So as I mentioned, BlackRock with DTCC, Digital Trading Corp, just mentioned in the other article with the Nasdaq, has been developing and has since launched last month a DLT, a digital ledger technology platform, in which private clients from the traditional market can trade cryptocurrencies. Developed and backed by Barclays, Mellon, Charles Schwab, Citigroup, the likes of those. BlackRock partnered with Coinbase, as we saw also last month in early August. So we know that Brian Armstrong, arguably a crypto superstar, right, is heading Coinbase. He's the most well-known executive there. Today, we saw a Coinbase exec, Faryar Shirzad, mention that Coinbase is looking for a bipartisan bill being proposed right now to the US Senate, potentially offering responsibility to this bill to the CFTC for exclusive jurisdiction within this digital asset commodity. So CFTC oversees commodities futures overall. SEC and CFTC have been at odds about whose jurisdiction crypto is, and that's extremely bullish. It had already been alleged that SEC was filing lawsuit against Brian Armstrong and Coinbase for having poor security measure and not following through regulatory standards. Coin likely to be looking at CFTC to regulate its futures exchange. This is very interesting because we saw recently, last month as well, in August, new treasuries forming for ETFs, entering what is quoted in this article as a quote-unquote sweet spot. So given the timing with the market, everything happening, people are likely going to be looking for fixed income treasuries, fixed income ETFs. What do we mention? BlackRock's portfolio holds 29% of it is fixed income, ETF side. We mentioned Coinbase, currently under investigation by SEC late last month for poor security measures. Brian Armstrong, then earlier in this month, backing the Tornado Cash lawsuit against the US Treasury. Why would Brian Armstrong back a lawsuit against Fed, especially after partnering with someone like BlackRock? Well, BlackRock is a massive private equity fund. Just a few days ago, First Trust Nasdaq, after announcing that Nasdaq will be offering cryptocurrencies on its portfolio to its institutional investors. So what is an equally weighted ETF on the Nasdaq100? Well, this is mostly focused towards a segment of the market, that's why it's weighted, that is mostly predominantly looking at low cost but high cap potential investments. That sounds a lot like crypto. Who are these asset managers funding this new move by the Nasdaq? Well, one of the major funders of this is First Trust Advisors. But First Trust Advisors, who are they? So just like BlackRock, asset management or trust with a portfolio of diverse inclusion of assets. First Trust at one time owned a huge stake in BlackRock and sold it. There are a lot of news around this. First Trust has held and exited on these types of companies: Bank of America, Google, Kroger. So when you look at the First Trust portfolio for a better breakdown and an idea of what sort of funds they're working with, on the ETF side, the only crypto portfolio that they own is offered by Skybridge. Very interesting, since we recently heard that none other than Sam Bankman-Fried himself took 30% equity into Skybridge Capital. Most likely, that 30% of Skybridge is the entirety of its crypto portfolio. So it sounds to me like Skybridge was looking for someone to head their crypto side, their digital side of their portfolio. What's better than finding a superstar of crypto like Sam Bankman-Fried, especially when the other one, Brian Armstrong, was already taken by BlackRock? So Skybridge's performance has been more or less not great, right, for its crypto side. And arguably, crypto market overall has been rough. It's been very rough. So you see here top holdings of this crypto side of First Trust Skybridge. It includes at the top the largest share being Coinbase. So, I'm not, is this a case of Michael Jackson buying Beatles copyright? First Advisor buying shares of what BlackRock's working with? No, I mean, arguably, Michael Jackson and Beatles, they're at the same level, quite possibly, over time. And so what's happening here? Is this a battle? Is this a battle for supremacy? And like I said, is this more importantly foreshadowing the coming of an ETF and a spot ETF, quite possibly, for crypto? Well, we're seeing SEC get in on blockchain. The way is not strongly weighted on private ETFs, but rather the existing cryptocurrencies that are going to continue to grow. Insider investor circles are looking at crypto with some extreme seriousness for the upside. And so here we have Michael Durso from Shorehaven Wealth talking about the inside conversation that he's been hearing around Wall Street, that crypto is the number one talk. Crypto has proper risk tolerance and have an asymmetrical risk You put 2% into Bitcoin, the most you could lose is 2%. 2021 Bitcoin went up 57%. You have gained 1.5% off that 2%. Those sort of gains are not and have not been easy to come by in the last 30 years or more. This is how the investor circle in Wall Street is seeing ETFs and quite possibly the coming of a private ETF and spot crypto ETFs. Michael Durso, co-founder of Shorehaven, a lot of financial experience since 2006, been a part of Alliance Bernstein, and in 2009 joined BlackRock, where he was vice president in the iShares ETF business. We just looked at a couple of articles that had named iShares as one of them. iShares being also an ETF platform on BlackRock portfolio, on this new treasury ETF, on fixed incomes, iShares being named. The entirety of the crypto market is slowly from the underside being entered into by institutional investors. They are solidifying themselves in the foundations of crypto. And what does this mean? Should you be worried? Things like Project Ion and BlackRock, and now Coinbase and Brian Armstrong. Is it a Sam Bankman-Fried and First Advisors versus BlackRock and Brian Armstrong? Or, as we've seen with the mixture of First Advisors, iShares, and BlackRock, and the holding of BlackRock by First Advisors, is this all one and the same group? And is it a civil war, a friendly civil war from inside of their group? Either way, this is extremely, extremely bullish in my opinion for crypto. And this just makes clear the potential that crypto has, and not just potential anymore, because we're waiting for realization and liquidity to move into this market. And does that have to do anything with the overlying macro market and the down prices right now? Are institutional investors really actually getting prices down, right? We see SEC building INX while Project Ion previously was recently released. So is this a private market versus Fed to enter into crypto and take advantage of digital ledger technology, DLT, and blockchain? It really does at least sound like that's happening. As far as institutional investing goes into crypto, Sam Bankman-Fried, while he came out of nowhere, he's funding actual crypto projects, and he is funding open source software in crypto. Brian Armstrong is going on record going against U.S. Treasury on lawsuits, and regardless of if that's private versus Fed now, that he's a BlackRock guy, with the anonymity chains like Tornado Cash and others, the anonymity that was really spearheading the crypto movement, and the early equity market of crypto in Bitcoin and other things like that. This could really free up a lot of liquidity. This could help people regain confidence in the market again. Well, before I end it, let's take a look real quick at the CDC entering into the SEC versus Ripple case. The CDC was invited as a friend of the court, and they explained in this article here what their interest is in this. If this case is unclear, the CDC in this article more or less really summarizes what's happening really well. So, investment contract, for the purposes of the Securities Act, is a contract, transaction, or scheme. It requires that this investment contract be physical asset, intangible one, or a digital asset, which could include virtual assets and or more generally a range of intangible and tangible assets. Under investigation, could possibly be deemed a security. CDC is defining that court be looking at an investment contract separate from its properties and inherent value. In other words, beavers can be used for their pelts, oranges can be eaten, condominiums can be lived in. So the commodity itself versus its properties should be looked at separately. Transactions in a digital asset can be simply for technology, and therefore it doesn't necessarily make them securities transactions. So number one, the commodity itself could be a security, and the properties itself, the way or the purpose for its transaction, could also be seen as a securities act. Digital assets are simply electronic ledgers or electronic records that can represent anything. Some digital assets can represent securities or tokenized stocks and bonds, while ledger entities, or ledger entries rather, can be back and forth technology transactions on networks as commodities. An example, Bitcoin. Digital assets are lawful, the transferring of value is lawful, and its fluctuation of value could be seen as a commodity. Investment of money in a crypto can be connected through communities via blockchain, and these transactions could be administered by this decentralized community, but doesn't have to be administered by the common enterprise. So in that case, it would likely be deemed not a security. When a subject of an investment contract is distinct from an investment contract's status as a security, the court should be focused on its decision to distinguish the scheme versus its entirety. So in other words, the court should be looking at what is planned for the coin versus what is happening with the coin. And that is a better way to determine what is happening as far as what is a Securities Act and what is a security and when is it a security. The court should make clear that the status of the subject of the investment contract is separate from the inquiry of the status of the investment contract. In this case, CDC says that the court has taken notice of recent public statements of 2 SEC commissioners saying that there is a decided lack of clarity for market participants around the application of securities laws to digital assets and their trading. So CDC is saying that the SEC has publicly stated that it recognizes that it doesn't know what is a security and what is not, and what is a Securities Act and what is not. SEC acknowledged this fact, so did the court. So CDC is asking the court to look at this case between SEC and XRP as a first impression. SEC has declined to answer, as well as the court has declined to answer defendants or crypto communities as far as what is and what is considered by the SEC to be a security, namely Bitcoin and Ethereum. However, SEC has argued that it does not claim that XRP is itself a security, but rather that XRP, even in the secondary market, is the embodiment of those facts, circumstances, promises, and expectations surrounding a digital asset and the manner in which it was offered and sold, and today represents that investment contract, which is a security. So in other words, SEC is saying that it has no problem with crypto overall. It is saying that, and crypto does not have to be deemed right away like they're saying XRP wasn't, and they're not deeming XRP right away that it is a security, but rather that how XRP conducted itself from the ICO to the secondary market sale of its shares that it held, that was subject to securities laws, securities regulation. The Howey test, in other words, has been used to gauge whether or not an item is a security. So the Howey being applied, according to the CDC, cannot be applied to the initial and the subject. In other words, the Howey was applied to XRP from the ICO level, and then the Howey was applied to XRP in the secondary market level. CDC is suggesting that this would provide for those lack of clarity and inaccuracies in this case. So CDC is saying, however, though, that that's the approach that SEC is using, and the SEC is suggesting that is to be the correct way to do it. CDC is saying, no, it's not, and is asking the court to decide whether it is or not. So while on one hand, SEC is saying that they're using proper testing to decide or distinguish securities versus non-securities, CDC is saying that it is clear that whether a company raises funds in exchange for a promise to those who use the funds to develop and deliver a yet to be created product, that transaction is an investment contract subject to the federal security laws. Wow. So really should take note on a lot of NFT projects, right? Who use mint funds to then, after the mint, create whatever they're claiming to be able to or wanting to create. So that sort of behavior is deemed immediately subject to federal security laws. So really, in other words, before you offer, before you have an ICO, whatever the project may be, it has to have at least generally its main functions already completed. Because you cannot offer to people the prospect of making money while holding that coin and asking them to hold, and the price goes up and you sell. You cannot advertise a product that hasn't been released and intending to make money on it. It seems so. It cannot be that an asset that is subject of an investment contract will forever embody the investment contract itself, cites the CDC towards the SEC, and that so for example, that certain casks of whiskey, families of beavers, orange trees cannot be subject to securities laws, which has never been existent ever. There has never been a precedent where the initial asset has been subject to securities laws just for being itself. In other words, the relations to the asset cannot be deemed securities because the asset itself is a security. So while it's extremely difficult to discern that digital assets may or may not be traded without the purchaser entering into an investment contract, it is likely that that is an unreasonable task. So the chamber, or the CDC, believes that as long as underlying assets do not include financial interests, such as legal rights to debt or equity, or digital assets are presumed to be commodities. So in other words, if the asset does not include a prospect of making money, the asset does not include gains in its advertisement, and those gains could be had by debt or equity. Debt could be also seen as staking, as mentioned by SEC Gensler himself, or equity, which is the return or the rewards, or if you're the project owner itself, the equity that you're holding. If you're a major holder of a project, so if you're a whale of a major project, it depends on how the asset was conducted from the ICO level. That could be determined whether or not it could be an equity, and that would presumably be a digital asset, if it is a digital asset, to be a commodity. So your major holdings, your debt, cannot be had by financial interests, in other words, had by advertisement of a gain, to seek other people's money to make those gains, and you cannot have a major stake in the project and advertise gains as a prospect or a reason to invest and make money off of those equities. In this article, CDC asks the court to look at the Loomis Gillibrand Responsible Financial Innovation Act, RFIA, and suggests that the RFIA has a more clear distinction and statutory distinction between initial offerings and distribution transactions. CDC is asking that the court look at the proposed bills by RFIA, and that in the RFIA bill, it suggests that when an asset is fully decentralized and there are no longer entrepreneurial or managerial efforts, the disclosure requirements are terminated and such asset is treated as a commodity. So this could be relating to a lot of the 0% royalties meta that we're seeing. Providing sound framework for allowing secondary transactions and resales of digital assets. These should occur, and while occurring, should require disclosures to protect the digital asset investors and increase market protections. So the RFIA provides sound framework for understanding when and when not protection on digital assets to investors and market protections to investors should be increased or existent or non-existent at all. So CDC concludes that it is not aware that the Howey test has successfully been applied to secondary transactions as well as the ICO event. Chamber, CDC itself, the chamber, believes that the subject of an investment contract, such as a digital asset, should be analyzed separately from the contract itself, and that secondary transactions as a subject of an investment contract may be considered a commercial or technology transaction according to the relevant facts and circumstances. Not sure if this is CDC rather going against crypto and XRP and clarifying for the SEC what arguments they need to tackle, or on the other hand, is it CDC making it clear that secondary market is off limits to distinctions of securities, and also leaving it up for argument still, and furthering the argument that we still don't know if XRP itself as an ICO or the ICO event itself is subject to securities laws. Opening the way for a relief for XRP versus SEC. Wow. That is actually all. Trade safe, have fun, and I'll see you on the next one. Thank you. Bye.